Okay, and welcome to today's podcast with Ballet. On the show, we are pleased to have our special guest from checkout.com, Bradley Riss, who is a Chief Commercial Officer. As you may have known, over the past 2 months, since November, Ballet did integrate credit card payment services directly on our e-commerce website on balletcrypto.com, meaning therefore you can use credit cards and debit cards directly to purchase our products and our wallets on our website. Basically making the whole user experience much easier for you guys in purchasing the Ballet wallet. An integral part of how and why that happened was because of Bradley and his team at checkout.com. And today we are excited to be talking with him about all things about payments, about crypto payments, payments, working with merchants and their views on working with crypto companies and providing crypto services. So yeah, we're excited to have him on. And also Julian Lee will be joining me, who is my colleague at Ballet. And so yeah, let's get started. So Bradley, welcome.
Thanks for having me.
Yes, if you can, feel free to give a short 1-minute introduction of yourself.
I was going to say the very generously worded introduction that you just did, I think suffices, but yeah, my own background is I've been in the payment sector for a long time. I've worked in multiple parts of the world, having lived in Singapore, the UK, and the US. Payments as itself is a very interesting field. Obviously, it's been growing on a tear for the last decade, and obviously online payments, as they say, a rising tide raises all ships, and that's definitely been the case with anyone involved in the sector. But it's also highly complex. There is no one size fits all. When you go market to market, things tend to change quite radically. So having had the luxury of being able to work in different places around the world, I like to think it gives me a fairly broad view on how people are looking at buying goods or services. Checkout.com is, again, you've already covered. We focus on payment acceptance. So that could well mean helping companies operating solely in the Web3 ecosystem to get value onto their platforms on the fiat rails. Also, it means in the more traditional merchant sector, supporting some of the largest brands in fintech and more broadly. So we can count companies like Samsung, Wise, Revolut, Coinbase, Binance. All of these guys are running on our rails today, as well, of course, there's Ballet.
Awesome. And before we get the ball started, do you own a Ballet wallet yet, Bradley?
So no, which I probably should have made sure I actually purchased one before this call. But I do love the product. It's pretty kick-ass. And people choose to custody their crypto assets in different ways. I think a diversified approach is probably what's in my mind. So yes, while I do have a Coinbase account and, yes, I will allow a CeFi company to custody for me. I know, but I also do, of course, have, the others, Phantom, MetaMask, you name it, where I've got some others. But having things in cold storage is just that little bit more secure, especially when, personally, I look at Bitcoin especially, for my own purposes, as more of a long-term hodl. So I have no intention of actually using my Bitcoin for commercial purposes or retail transactions, as I may do with some of the other cryptocurrencies I hold. So yeah, definitely the idea of being able to keep things safely stashed away is something that I'm well overdue in building in.
Okay. Yeah, I was just going to point out Coinbase.com is a centralized exchange, and there are risks to that. And as you know, you are well aware of risks in the payment and digital space. So, but you know what? I think we've been meaning to send you out a Ballet wallet for quite a while now, and maybe after this call, we'll see how we can still send one out to you. So to start off with the conversation, when did checkout.com become involved with Bitcoin and crypto businesses? I know, like you said, traditionally, checkout.com has been a traditional merchant payments company and service. So when was that pivoting point for checkout.com?
So it's funny because every merchant's needs are different. I can talk on one day to a large travel company and I could talk to their major competitor, but the things that they individually care about will invariably be different. One of them may care about FX rates. Someone else may care about the accuracy of reconciliation. Someone will care about offering the right local payment methods for, sub-Saharan Africa. It's always a very sort of variegated basket. But what it means is that over the years that Checkout's been building on our platform, we actually cover most of the global use cases, I think, now that people would ever want to employ. So I'm not going to say we accidentally fell into the crypto world because it wasn't that thoughtless. But obviously crypto, where it was 2017, 18 is a very different place from where it is today. And we realized that the product set that we built out that was serving the largest fintechs in the world would actually translate very, very well to the needs of, for example, exchanges. So we have had exchanges on our books for a long time. I believe the first one was WireX, if you go back far enough. So it's been a few years, but definitely we've doubled down on it over the last 24 months. And part of that is a realization, not just that we want to help, the largest or the growing Web3 organizations to really get value into their ecosystem. So moving from fiat into crypto, whatever that may mean, be it USDC, be it Bitcoin, be it anything. But we're also now kind of looking into the potential that the underlying technology has. I mean, blockchain technology has a lot of promise in so many different ways. And there's definitely things that we think we can incorporate into our business that will maybe not be a paradigm shift forward in terms of, the platform's capabilities, but will definitely improve the quality of the service we're able to provide to our end customers. So I think our engagement was initially, how do we help merchants, as in exchanges, NFT platforms, whatever they may be, who wants to accept fiat payments directly versus only cryptocurrencies. And now that's evolved into looking into other areas, as I said, around how we could leverage the underlying technology to improve parts of our business as well.
Okay. And then as comparison, obviously there are other traditional merchant payment companies in the space as well that are trying to get in, such as, PayPal, Venmo, MoonPay. How would you compare Checkout.com amongst your competitors in terms of, I guess, market share or some kind of like measuring stick as to how much, which one has, more of the upper edge in the crypto space?
Definitely case by case. So if you look at someone like MoonPay, again, this is no secret, they are a client of Checkout. We have a great relationship with them and they've built a really good company. I think where they operate and where we operate, there are slight differentials, which is where we may be a fit or they may be a fit, depending. So if you look at some of the services that MoonPay very effectively offers, and there are a whole host of others, Wire, Ramp, Uphold, Circle. I mean, all of these guys have built really successful businesses in an incredibly short space of time. They do things which are outside of what Checkout's core competencies are. We are the source, as in if you want to offer payments, we are the most direct way to do so. We connect directly into the Visa, MasterCard networks. We connect directly into local payment networks, be it Alipay, WeChat, you name it. What we don't do though is we don't act ourselves as the merchant. So this is where, if you're looking at someone who I'd probably group those kind of companies, the MoonPays as a fiat on-ramp. That's kind of the classification that they seem to have, this seems to be used for those businesses now. But they're also doing other things. They're doing swaps for the crypto. So they're taking the fiat and actually doing the exchanges in some cases. In some cases, not all of them, but they can provide some level of custody services. But even as a non-custodian, what they are doing is providing KYC of the end user. So all of these things are very valuable services, but they've been built not solely on top of Checkout. Obviously, there's a whole host of solutions that these guys are using, but we don't view them as quite apples to apples with where we fit. If I was looking at someone like PayPal or Square with the Cash App, I view that slightly differently. People aren't actually really using crypto as a payment method via PayPal. So I think the initial press release was misconstrued a little last year. But what PayPal is enabling you to do is to buy and hold crypto assets. That's great. Obviously, there's a huge amount of money in it for them. But again, the kind of services that they're offering there is more kind of a purchasing of crypto and a custody model, which is slightly different, I guess, than where we're looking to play. We're not that sexy. I sometimes wish we were, because I've got friends who work for B2C fintechs and everyone knows who they are. And they're doing some really cool, innovative things, but invariably they're building those companies on someone like Checkout's rails. So our job is to basically look at we're very lucky to have an awesome customer base and just see the kind of amazing innovations that they're bringing to markets by building on top of some of the direct core connections we have from a payments perspective.
I remember when previously speaking to you that you mentioned something about Checkout eventually integrating a stablecoin settlement of their own. I'm not sure if that's open news or anything. Is that something that's still happening within the near future? And in a scenario like that, were you saying Checkout was going to innovate their own stablecoin, or would this be an adoption of a readily available, currently used one?
Good question and great memory. I'm going to be slightly guarded with my answer here. What I will say more broadly is that the application of stablecoins as a potential to move the traditional payments and fiat money movement world forward is very clear. I think if you're looking at some of the major challenges, and this is probably through the lens that I view it as, is why would I use DLT or why would I use blockchain technology? Like, what am I actually gaining from that? There has to be a problem that we're solving for. And the easiest comparison to make here about, why a peer-to-peer zero intermediary transaction is more efficient is when you compare it to something like the SWIFT network. So the SWIFT network is the most common way for people to send normally relatively large amounts of, again, fiat currency around the world. But if you think about how that works, it's 3 to 5 days. It costs you $35 for the wire. I mean, it's just not that efficient. You also get no instant authorization or proof that the funds have arrived. If you've accidentally entered in bank details wrong, you got the IBAN wrong, then they may not ever reach there at all. So the SWIFT network definitely could use an update. I think everything nowadays people expect to be real time or near real time. And that's where, if you could imagine, as opposed to me sending USD via SWIFT, if I was sending, for example, USDC on chain, then I can now send that instantly in a completely trustless environment as well. And it will reach the recipient straight away at potentially zero cost, obviously, depending on gas fees, what chain you're building on, etc. So you can see there's a clear problem that we're solving. We're taking 5 days to zero. We're taking $35 to zero. So that's why I think stablecoins will have a really important role to play in the convergence of Web 2 and Web 3. And I do believe it is a convergence. I don't think it's going to be a complete either or. And I know for the purists out there, that may not be what people want to hear. But I think that we should want to bring people into this kind of Web 3 era. And while NFTs has been a pretty compelling way to get consumers engaged and interested in the space, especially in the last year, I think stablecoins will have the exact same effect for businesses. It'll be a really efficient way to, let's say you're shooting a film in a far-flung country where you have no bank account, but you're using 50 extras from a local town. How do you pay them? Do you pay them in cash when you're there, like on set? I don't think so, right? So even for use cases like that, you can imagine just a public address. And these may well be people in emerging markets where they don't trust their own financial institutions. And you can imagine, of course, from that point, once you're enabling a public address and sending them a stable coin, hey, why not layer in some more DeFi tools around that as well? Allow them to do some staking, some lending. And now suddenly they've got a digital bank account not tied to potentially their domestic currency, which may, depending on the market you're in, be vulnerable to hyperinflation. And they can have a diversified approach to managing their own finances, even if, all they have is a smartphone. So I think there's a huge level for financial inclusion in emerging markets driven by DeFi. But I think a lot of this will have to be run by companies who are viewing stablecoins as a broader problem to solve around how to move value across the world.
Yeah, I love that answer. I just think that, the synergies between stablecoins and, crypto in general, and just digital payments, e-commerce, it does seem to be so evident. But I think you did delve into an interesting point just now, where the opportunities are very clear, but so then too are the dangers, right? You talked about currency that's no longer really regulated, and people having their own digital bank accounts, cutting out traditional banking sectors, and for that matter, payment processors such as yourself. If stablecoins did become readily, accepted, I mean, we'll just forget about the regulatory hurdles that it would take for this to happen. But would that put checkout in companies like yourself? Do you think that would be beneficial or hurtful?
Beneficial. I think that there's a huge role for regulators to play here. And I think people look at regulation and instinctively we think bad. It's the same way the Bitcoin Miami conference last year was funny. One of the stands, and you're part of my French, but this is literally what it said. It said, "Fuck KYC." And I was thinking about, I was like, I kind of get it in some ways, but at the same time, KYC also exists for a reason. I mean, do we want people to be able to fund terrorists anonymously for as much as they want? I mean, no, right? I think most people would probably agree with that. So I think that there's, again, this balancing act to play, which is, unfortunately, if you're going to start asking for KYC, that's going to add friction to customer onboarding and to some of the tooling. But there's going to be a kind of a happy medium that needs to be found at some point. And I think stablecoins is probably where, if I was a regulator, I would start there. I think that there's ways that you could come out, especially here in the US, where obviously there's been a lot of talk around CBDCs and stablecoins. I don't think the regulators are doing a bad job. I think they're taking their time. And if you don't have, full confidence in your understanding of something, then you should take time. You shouldn't rush to regulate. But I'd love to see a piece of regulation that came out that said, stablecoin must be X, and X must be one-to-one backed with an equivalent fiat currency pair. It could be one which is, a slightly broader definition like USDC is, where it's maybe predominantly cash or similar liquid secured assets. And then you could even have, algorithmically stable coins as well. And you can actually write legislation around all of them. But I think the first thing that would help is actually just saying a USDC, one USDC or one USDP or one UST or, should equal $1. And at that point, then companies can start embracing it with a little bit more confidence, because it is tough when you're in a regulated industry and you've got to do reporting. You obviously have gap to deal with on the financial side of things. And it's not easy to classify these assets because everything else we do is under a heavily regulated environment. And of course, there is zero regulation in play here. So I do think that there's going to be a balancing act at some point. And I think you'll see on the customer facing side, you'll start to see more things around, things like permission DeFi. I can see that being something that will start to creep in as well as regulation comes. But the point is that to leverage the elegance of blockchain technology, you can still do that with regulation. It just needs to be written in a way that allows innovation to flourish. And I think you see this at the beginning of every industry. There's a lack of regulation, and that gives a lot of freedom. And we've seen industries crushed before where regulation has come in too aggressively. But crypto's tough because no one has any basis for comparison here. This is potentially a paradigm shifting event. So the regulators definitely have my sympathies, but also at some point they do need to make a statement and clarify at least what their view is of stablecoins. And obviously from a consumer perspective, I think people would love it to be almost classified as a security in markets like the US. So you don't have to pay income tax, you can pay capital gains. So there's lots of things I think we'll see in 2022, but regulation is one of them. And I view it as long-term a good thing, even though it's going to definitely create some teething pains.
Yeah, if you spend enough time on crypto Twitter, you'll see the verbiage "fuck KYC" pretty often, especially coming from the Bitcoiners. They tend to be the more privacy-focused group of the whole crypto industry. But yeah, I think even on my Twitter, I've retweeted someone else who actually said "fuck KYC" too. But
I mean, it's a good statement. It's powerful, but and I get the sentiment as well, because of course we're trying to move things away from centralized control. People should be able to custody their own assets, and they should have privacy as part of that. But if I am sending money around the world, there's a lot to be said for actually making sure that that's not being used for illicit purposes.
Yeah, exactly. So, like I mentioned before, users and customers can now use credit cards directly on our website. I even have done it myself using my own credit card, and the whole process was super smooth, super easy. Just put in my credit card information, my shipping information, boom, bam, done. Before, our website only accepted PayPal and BitPay. But now with credit card payments, which we accept a host of different providers such as Visa, Master, Amex, Discover, JCB, Diners Club, it's would open up a lot more doors for our business and as an e-commerce business. But before the whole integration, and like I mentioned to you before, when I first had the initial contact with you, it was quite a struggle finding a credit card processing service company that would accept us. Companies such as, like, we reached out to like dozens of them, such as Stripe, Aiden, and they all rejected us, mostly throwing us under the umbrella of their policy being related to crypto, even though as a company, we don't touch crypto. Like we don't accept crypto. We don't send back crypto to anyone. We specifically produce a wallet, an actual physical object that has no service contact with crypto during the whole manufacturing and selling process. And I think that's something that they couldn't understand. And I'm assuming as well, it's probably also maybe their lack of due diligence and following up and seeing what exactly we do. But I guess my question to you, with that being said, is like, what made you what made you and your team accept us as a potential client of your guys, as opposed to the other credit card payment processing companies?
Yeah, I mean, okay, so let me say this in a politically correct way. I think that you're selling a physical good. I mean, it's not that complicated. You're a retailer. So, I mean, this is the thing that it's because it has the word crypto somewhere in the title. You can see probably some poor underpaid intern somewhere looking at an application form, seeing the word crypto, cross-checking that with the internal prohibited list of the companies you mentioned and seeing a big, red X and saying, nope, we won't touch it. And I think there's a broader point there as well, is that it doesn't matter when you're a service provider and you're buying services, you ideally want someone who has an affinity with your business in a perfect world, but worst case scenario, at least has an understanding of what you're doing. And I think that everything crypto, it can be scary. And if you are in a regulated industry like payments, look, it's tough, right? We have to go through a lot of checks ourselves whenever we're starting to work with a new organization, knowing that we have a whole set of very regulated rules to abide by, but equally this is an industry which operates in a slightly different way. So I think it's more a case of saying, we're happy to be on the bleeding edge of things like this. We're quite a young company, again, compared to the two you mentioned. We're definitely the new kid on the block. And so I think a lot of our appetite is built around the fact that our differentiator in our market is about having superior, more modern technology. So when we look at crypto, we think, cool, here's more modern, superior technology. And hence why we are looking to bring it, as I said, into our business and obviously help service the people who are really dedicated 100%, like you guys are, to serving that sector as well. But as I said, I mean, from my perspective, what you're doing is selling a physical good. You have very good policies in place. You have a good website. It's a good product. So no, there's zero issue from our end as to, why we would ever have any doubts around working with it. But I think it's more of a broader issue in the payment space, is there is still some reluctance to serve the crypto sector. And I'm not going to speak for other companies as to why, but you could second guess that it's probably issues around trust is probably more basic level and even understanding. We got to remember that you guys have turned on cards for a reason. Even though people who are buying your wallet must have crypto or intend to hold crypto, otherwise, why are they buying it? But it's still not super easy to check out using a web browser plugin. I mean, every time I use MetaMask, I want to pull my eyes out. Whereas you think about an Apple Pay transaction, it doesn't get much less friction than that. You literally look at your phone and your transaction goes through. So there's a lot to be said for kind of some of the things that Visa, MasterCard have spent the last 70 years building really, really well. And if you're looking at where value sits today, okay, fine. Look, TVL and DeFi projects and everything else is blown up, but it's still a tiny fraction of the value that's stored in fiat. So if you want to kind of access your customers, I think it's important not to take an either or approach. It should be and I think it is beneficial to give customers optionality. You will still have people who hit your website and want to pay with Bitcoin or Ethereum or whatever, but they're also probably just as likely to say, well, I'm pretty used to using my Visa card that's already stored on my computer. I'll just do a one-click checkout. So I think it's more about saying, how do we think the world is shaping out? Do we think crypto's here to stay, and do we think it's going to be a viable form of value transference, not just today, but in the future? And I think the answer is that yes. Hence why I use that word convergence. It's not about Visa or MetaMask. It's about and let the customer choose which one they want to use.
So say, for example, if there's a small merchant out there, either a business online e-commerce merchant or a small business merchant at the local shop down the street, and for them, obviously they've been accepting fiat payments, for the whole while. But for them accepting crypto can come in two forms, right? A user or a customer can send crypto directly to them, or with what we're seeing with some other competitors in the space that I'm not going to name. A lot of these Visa cards are coming out, which will allow users and customers to basically take their crypto and have the company or the company behind the card convert it into fiat and directly pay fiat to that merchant that they're buying whatever they're buying. And I'm assuming the merchants are a lot more comfortable with accepting the latter option, having a user basically convert their crypto on spot to fiat. But the first option of merchants accepting crypto directly, and I think I already know the answer to this. I'm sure perhaps there is a personal reason as to why many merchants don't accept crypto yet, maybe because they don't understand crypto. But what would you see some other issues or see some other hurdles that some merchants need to overcome before they start accepting direct crypto payments?
It's comfort level. Do you remember your first, I mean, I don't know, it doesn't matter, whichever wallet you're using, right? I mean, but when you're using a wallet to pay using crypto, do you remember the first time you did it? Like, even you guys who are very technically fluent, it's not kind of easy. The first time you do anything, it's not simple. You have to get used to it and then understand, oh, it does work. And okay, why am I signing this transaction? Okay, oh, look, I got my NFT in my wallet or whatever it is you're buying. I think you have to go through it once. And I think that's the hardest thing is once people do something once, they will do it many times over. And it takes the time to get traction. I mean, Apple Pay was not a huge shift away from just contactless NFC payments, has a similar mechanism. But if you look at the Apple Pay user growth, I mean, it's been this exponential curve. It becomes a vehicle of momentum and a matter of momentum rather. That once you have done something once, you'll be more comfortable doing it again. I think that there's a few other points though, and a lot of it depends on the business that you are, because some businesses, it probably shouldn't offer crypto. It may not actually be right for their customer base. And I think that's one of those considerations is, what's the goods and services you're selling? What's your customer demographic look like? Are they likely to be, early adopters, Web3 advocates? Are they going to have most of their wealth in Bitcoin, or is it going to be in US dollar or something else? Through that lens, it should then direct what your action should be as a small company. But even then, if you think, hey, I know that there's customers out there who really want to use ETH to buy stuff, but at the same time, how do I set this up? And there's not an easy sort of pathway for people doing so. And let's say like it's not perfect yet. If you're a small company, you now have to manage your private keys. Well, what happens if you give that to someone in finance and maybe you only have one person in finance and they leave the company? What about the anonymity factor? What about the risk that's involved? What about some of the basic hygiene factors? How do I do a refund? If I'm running a subscription service, does crypto natively support subscription payments? It doesn't yet. So I think there's lots of things there where we are on the bleeding edge. And there's definitely a lot of value in doing that, but there's also pain for the early adopters as well. So I think that's where, a lot of the companies who we've been talking about already, the MoonPays of the world and other, they have established themselves as a good way to test out crypto. I mean, they may offer fiat, but I think we'll see a lot more of this over the coming months, is that companies who enable fiat payments will start enabling crypto payments for their merchants as well. And as they most likely be offering this to their existing customers, that comfort level should be much easier to reach, because they will have someone like a checkout.com saying, hey, we've been working together for 5 years. We are sending you hundreds of thousands of dollars every day as your settlements. Well, how about now we will also send you either ETH and BTC to a public address you give us, or we'll convert it for you so you only have to deal with fiat, but your end customer still gets the benefit of choosing how they pay you. So I think that you're going to see this evolution increasingly. It's just right now is that, it's very divided. Most companies are not Web 2 and Web 3. They're one or the other. And I think that's an area that we're really trying to double down on, because we see there's a huge value in us being able to help both sides of that equation. Let's help Web 2 merchants and Web 2 customers interact in the Web 3 world. And likewise, for Web 3 organizations, we know that most value is stored in fiat, not crypto. So let's help them just bring that into their ecosystems.
So you've touched upon the adoption bottleneck as kind of being many factors affecting it, right? One being just the average consumer's comfort level with it, right? The first time doing it, and then different merchants deciding if crypto is maybe too volatile or stable enough for what they offer. But could you talk a little bit more about governmental regulation and how the different forms of it, maybe specifics in different regions? Like I know Singapore recently has had a fair 180 flip on crypto, right? And they're now regulating it and making it fairly legal. Like, could you comment a little bit on just the different regulatory environments?
Yeah, it's funny, isn't it? Because you had the same problem with the internet. I mean, Web 1 had similar issues. I mean, I guess it was kind of decentralized in its own way, but the internet is global by nature, but regulations are jurisdictional. So the challenge is that while the Monetary Authority of Singapore are fantastic regulators, I'm really big fans of theirs, I think they're very progressive, so great. I think them making that move is going to act as a signaling beacon to other regulators who very possibly look up to Maz because they are known as being very progressive and very effective. But of course, in China, we're the opposite. So I think it's going to depend market by market, and it will be ebbs and flows. Regulation often is. Maybe there's comparisons with prohibition we could be building here as well, right? But it wasn't, it was last century, I guess, but the US wasn't allowing alcohol sales, and then that was allowed, and it wasn't again. So I think you're going to see the same with crypto as it emerges. But I do think the line of best fit will be up and to the right, as in more regulators will be taking clearer and more positively favorable stances around crypto in the years to come. I think we're going to move generally in that direction, but it's always case by case. And for every 2 markets that maybe make a progressive move forward, you'll find another one that takes 2 steps back.
Yeah.
Okay.
Eric?
Yeah. And I think you were spot on with that. Every environment, every country is going to be different. And I mean, even for me and Julian being out here in Shanghai, I mean, we know and we encounter all the different issues with the internet and with different types of payment restrictions that we have here in China. So, but at the same time, the internet or crypto for the most part is global. There really isn't any restrictions on it. Bitcoin cannot be stopped or controlled or slowed down by any government. So I guess
maybe Kazakhstan.
Oh, okay.
Yeah, I'm just seeing as obviously they kind of shut down the internet last week. It's
Yes.
It's a reminder that you can still go nuclear and you can literally shut off the internet, and that's the only way probably to stop the hash rate.
Yes. Yeah, they well, that's funny because I have come across articles explaining how a person can actually make a Bitcoin transaction payment without the internet. I think by using some other means, by satellite or by SMS, but yeah, that would be another interesting topic. But on the last topic for this podcast, and more of an open-ended kind of fun topic, NFTs as payments. Now I know, there is no really concrete kind of answer to this, and I don't think for the most part. I mean, correct me if I'm wrong. I don't think any of the current crypto payment providers out there, such as you guys, MoonPay, or Wire, for example, I don't think any of them would process NFTs as payment, because essentially, even though they are tokens, they're non-fungible tokens, which would be very more difficult for any merchant to sell it into or convert it into another type of currency. But I think it would be interesting to explore this realm. NFTs as payments. So the way I'm thinking of it, right? And of course, Julian and Bradley, you can chime in right afterwards. For example, if there is an NFT collection with a huge collection, right? Most of them kind of market themselves to be a collection of 10,000 NFTs with a relatively high floor price, for example, and a relatively stable floor price. Why and why not wouldn't a merchant want to accept an NFT if, one, there seems to be a stable value based on the floor price? Let's assume that the NFT project has been around for more than a year or 2 years. The NFT is on Ethereum, making the NFT also a lot more interactive with other Ethereum kind of applications and tokens. And also, for the fact that NFTs right now, I mean, they seem to be widely accepted and widely known to everyone on the internet. So I guess, why and why not would that make sense, I guess?
Julian?
Yeah. Okay. Yeah. I mean, well, the first I would say there are DeFi platforms that currently collateralize NFTs, and they are willing to, lend you a certain amount of Ethereum for yields, for example. But if we're just talking about actually trading, a non-fungible token, I mean, kind of says it right there. It's a little less liquid than actual cash, fiat, or even crypto, right? It'd be like if I had like a Monet or diamonds, not every vendor, I mean, they might be able to see the value in it, but they wouldn't necessarily be able to like assess it off the spot or be certain that they could sell it when they really need it. And I think that, well, payments, that's pretty much what it is. I mean, it would be like, yeah, I don't know. That's what I think.
I think you're spot on. I think that, as you said, we're seeing this in some areas of DeFi now, is that you can use your NFTs as collateral for lending or other purposes. And even then you have challenges, because it's the same with a Monet. It's very hard to value. It's a unique item in the case for Monet. And even in a series, maybe there's a floor price that you can look up, but obviously that's pretty dynamic and changes based on the markets. And then on top of that, also there's, scarcity, rarity value of the individual NFT within that series. So it may not even be something that's easy to put a value on based on the floor price that may be more public. There's companies like Upshot, which are trying to do good work in the realm of price discovery in the NFT sector. But again, it's very sort of, and I'm not saying they're doing a bad job, because I think they're doing the best job they can, but the model effectively is getting industry experts effectively to validate whether the value of an NFT is in line with what they think. And there's a reward system for it. So they try to be honest. And it's a good idea, but you really need to have, for a payment transaction, you need to know the amount you're paying in that instant. And it needs to be instant discovery, because everyone knows what one Bitcoin is, because they can just look it up in real time. Everyone knows what $1 US is. They can look it up in real time. So I think as collateral, yes. Could you take credit against an NFT in the future and link it to maybe one of your wallets? Yeah, that would be a really interesting idea as well if it was locked up. So I can definitely see ways that spending power may increase based on someone holding a lot of NFTs, and they should be able to leverage those assets because it may represent 50% of their net worth. So of course we should allow them to do so, but actually using them directly for payments, you're basically going back in time to a bartering society where I would go trade my sheep for your third daughter or something, and we'll see how that goes. And I don't think that's coming back anytime soon.
Awesome.
Oh man, I didn't peg you as an NFT investor, Bradley.
I have three NFTs, and none of them are worth much. So
what are you flipping these days, man?
I'm not flipping anything. I should have done. I have a very good friend in Singapore who was very on it, I would say, early. But again, I think the reason he's in it is not the reason I would be. As in, you can be an NFT investor, as in you're looking to speculate on the asset and hoping that they go up in price. And hey, a lot of them do. Or you're doing it for the community, or maybe you're doing it for both. And I think that, in reference to my friend, he's definitely all in on the community and really embracing it. So I think that's one of the other things that NFTs have really highlighted for us in the last year, and DAOs especially, is it's a wonderful way to see how humans organize and to see how people who really don't have any prior connection to each other can suddenly rally around a topic, and these communities can spring up and become, very, very in-depth, very passionate in such a short space of time. So I think we're going to have lots of kind of social learnings from this when we look back on this in 10, 50 years. I reckon this is the kind of thing that'll be studied in organizational studies courses at universities in 2080.
Well said. That is well said. Great way to end this podcast with such a crypto bullish statement, Bradley. Thank you again, Bradley, for coming on this podcast. And I'm sure me and Julian and also our users and community learn a lot about different issues and different kind of regulatory issues a crypto company must overcome in this space if they wanted to kind of get their feet wet in this space, so to say. So yeah, thank you again for coming on.
Pleasure. Thank you guys for having me.
Thanks, Brad.
Yeah. So thank you for listening to today's podcast from Ballet. If you enjoyed the podcast, please leave a like and leave a comment. And if so, please follow us on Twitter. Also, please be sure to check out our YouTube page for the next podcast. Thank you.